content, what we are looking at today, will be the bank reconciliation, also the creditors reconciliation, asset disposal, and then partnerships, only the ledger accounts. We start with bank reconciliation. Now, there are two different ways or methods that you can use to do the bank reconciliation. The first one is where you have to tick off. In other words, they give you the complete CRJ CPJ, and they also give you the complete bank statement, and then you have to compare yourself and tick off. And the other method is where they give you the differences. They've already compared the two, and now they only give you the differences. Now, what must you be able to do? The type of questions asked. The first method is where they ask you to complete the CRJ, the CPJ, then you have to post to the bank account, and you have to do the bank reconciliation statement. That's usually where we start in grade 11. From there, it can also be that they ask you only to calculate the correct balance of the bank account, and then you have to do the bank reconciliation statement. In other words, instead of doing the complete CRJ CPJ bank account, it all goes into just calculating the correct balance in the bank account. And then the third method will be the table method, and we are going to look at one of those activities where we only use the table method. So when we start in the cash journals, we start with items that appear on the bank statement but not in the journals. So then, which items will appear on the bank statement that must be entered in the cash receipts journal? Things like interest on current account. The bank credited our account with interest. They added it to our account. Direct deposits, for example, the tenant paid rent or debtors paid us by direct deposit, or then errors and omissions, where we made errors or we omitted some of the transactions. Cash payments journal, things that can be on the bank statement, not in our CPJ, that must be put into the CPJ. Interest on overdraft. If we have an overdrawn bank account, then the bank takes interest from our account, so they will debit our account with interest. Also bank charges. We pay for all the services that the bank renders, therefore they charge us with bank charges. Debit orders or stop orders that goes off directly, and then also errors and omissions that we made will be corrected in the CPJ. If we move on to the bank account, the next step, we have to do the bank account. We start with the opening balance. Now that you will get from the previous month's bank reconciliation statement, or it will be given. So if the previous month's bank reconciliation statement is not given, then you have to search for it. Somewhere they will give you the opening balance for the bank account. This can be a debit or a credit balance. The next step, you post from the CRJ total receipts to the bank account, and from the CPJ the total payments. Now the total receipts will always be on the debit side of the bank account. It can never be on the credit side. Same with total payments in the CPJ. That will always be on the credit side, irrespective of whether we have a debit or a credit balance on the bank account, irrespective of whether the bank account is favorable or unfavorable. Total receipts on the debit side, total payments on the credit side. And then we calculate the closing balance, and again, it can either be a debit or a credit balance. There is no rule that says that if a bank balance starts with a debit balance, then it must end with a debit balance. It can start with a debit, end with a credit. Start with a credit, end with a credit. There is no rule, so you have to determine whether the bank account is favorable or unfavorable. if we look at the bank reconciliation statement, this will be information appearing in our books, in the CRJ and CPJ, but not on the statement. We start with a debit or a credit balance according to the bank statement, which we received from the bank. Then we credit outstanding deposits. We will debit outstanding EFTs. Then we will debit or credit mistakes made by the bank, depending on whether the bank debited or credited our account by mistake. And then we end with a debit or credit balance according to the bank account that we just calculated in our bank account. And then the magic is the two totals, the debit and the credit column, will be the same or supposed to be the same after the reconciliation. Important principle that you have to remember, in our books, a debit balance is a favorable balance and a credit balance is an unfavorable balance. And in the books of the bank or on the bank statement that we receive from the bank, a credit balance is favorable and a debit is unfavorable. If we think about the bank account in our books, since grade 8, we've taught you that bank will increase with a debit entry and decrease with a credit entry. Now, from the bank's point of view, in the bank reconciliation statement, will just be the opposite. Credit is plus and debit is minus. So when the instruction says that the bank credited our account with interest, then we know they added. If the bank debited our account, it means they subtracted money. So we must look from the bank's point of view when we reason for the bank reconciliation statement. Then also we have internal control over cash. Also questions that can be asked on that. There can be theft. We will cover that in one of the activities, where the person going to the bank will be robbed or something, or that person can take the money for themselves. Obviously, if we cannot get that money back, we have to reverse that entry in the CPJ. And that will be the prudence GARP principle that applies here, the more conservative. We can't keep that cash on our statement of financial position as if we have that money. If we lost it, if there was theft, then we have to reverse it in the CPJ. Then also if we have late deposits, and here it is important that you look at the dates given. They will just mention that a certain deposit was made on the 15th of a month, and by the end of the month, that deposit still doesn't appear on the bank statement. So where is that money? The next month it will appear on the bank statement. So it's not theft, it's just a late deposit, and we call that rolling of cash. Did the bookkeeper or the person depositing the money use that for own use in that period of time, or lend it out to somebody? Rolling of cash, we have to investigate. And then also there can be internal fraud, hacking, or there can be an unauthorized use of a PIN or the code used for access to the bank. So let's look at activity 4. This is the table method, and in your activity book that will be on page 5, and in your workbook it will be on page 4. Then the nice thing about these revision activities, there are 3 activities that you can attempt on your own, and there will be a solution so that you can check yourself. So please do the other activities on your own as part of the revision. Okay, let's do activity 4. Activity 4 says we have to analyze each of the transactions below by completing the columns. So instead of doing the CRJ, CPJ, the bank account, and the bank reconciliation statement, we only have to do it in table format. And then there's an answer about Karen Jones. She has been solely responsible for this job for the past few years. And now we have to explain two problems you have identified from the transactions below, which show a lack of control of cash. We have to quote figures. So you must make sure that you indicate a number somewhere, an amount, and then we have to provide a solution for each problem. If you look at the information, the table given, and there are the 7 transactions that we have to put into this table. When we look at something like this, you realize that the bank account on the debit side, this is actually referring to the CRJ. So if we are supposed to put something in the CRJ, it will go into the debit column of the bank account. In the CPJ, we credit bank. So if something is supposed to go into the CPJ, we will put it in the credit column bank account. The bank reconciliation statement, we know that in this case, debit is plus, credit is minus. According to the bank reconciliation, credit is plus and debit is minus. And then they also ask us for the contra account details if we put it into the bank column or the bank account. The first one says a deposit of 53,000 made on the 20th of April was in the cash journal but did not appear on the bank statement. This is now by the end of April, the 30th of April. Deposit, it's in our books, it's not on the statement, therefore we are going to put it on the bank reconciliation statement, credit outstanding deposit. That will increase the amount on the bank statement. We already see there the 20th looks like a problem. Number B, a stop order payment of 5,500 for the monthly repayment on the loan from Rand Bank must still be recorded by the business. So there was a stop order, we saw it on the bank statement, we haven't made the entry yet, so we must put it in our bank account. We must credit because it's a stop order, our bank decreases. And the account that we will debit will be the loan at Rand Bank. Remember, we have to add the name of the bank for the correct presentation of that account name. Then number C, EFT 283 for 1,500 issued to a creditor as part payment of account of 2,500 appeared in the cash journal only. We paid a creditor. It appears in our CPJ, but it does not appear on the bank statement. So obviously we have to show it on the bank reconciliation statement. And there are two amounts. The one is 1,500, the other one is 2,500. But the EFT amount was for 1,500. Then number D, EFT 2884265 appeared on the bank statement, and this was issued, EFT was issued to mat suppliers for stock purchased on the 12th of April, and it was incorrectly entered in the cash journal. In the cash journal, it was entered incorrectly, so obviously we must correct it in our journals. The difference between 265 and 256 is 9 Rand. The EFT was for 265. EFT goes into the CPJ. It was for 265, but we only wrote 256, so we need to enter another 9 Rand in the CPJ. And this EFT was for stock purchased, so the contra account will be trading stock. We credit bank and we debit trading stock. Number E, we issued a EFT to pay a debtor, 680 Rand, J. Brady, and we also allowed 20 Rand discount. And this was not yet, or this was a EFT, but we haven't showed it in our books yet. So that must go in the CRJ, because we received the money, the debtor deposited directly into our bank account. So it must increase with the 680 Rand that he paid, but we must also make an entry for the 20 Rand. That will also be in the CRJ. Obviously, we have to credit J. Brady's account, but we also have to credit debtors control, because the debtors control account will decrease because the debtor paid us. But also J. Brady's account will also be credited with the discount, and debtors control will also be credited, because this was for discount allowed. Now, if you think about this logically, when we do the CRJ, when we have the columns in the CRJ, we have the debtors control column and we have the bank column. Then we have the debtors control column and we have discount allowed. Now, in this case, we received 680 Rand. We allowed 20 Rand discount, so the debtor will decrease with the 700 Rand. So that is why we credit debtors control with both amounts. And bank will be only debited with a 680 and discount allowed will be debited with a 20 Rand. Number F, a EFT for 920 from the previous month's reconciliation statement issued to Telkom for the monthly telephone account appeared on the April 2020 bank statement. So there was an EFT payment made the previous month. It did not appear on the bank statement, so we've put it in the bank reconciliation statement. This month it does appear on the bank statement, so that will be one that we just tick off. So we will not make any entry for that. We will tick it off on the previous month's bank reconciliation statement. And then the last one, a deposit of 20,000 Rand for rent received from BB Traders did not appear on the bank statement for April. And after investigation, Karen stated that she was robbed on her way to the bank. And the owner then authorized the cancellation of this deposit as she was not certain if any of this money will be recovered. So we thought we received the money, but we actually didn't. Therefore, we have to cancel it in the CPJ. Now, according to the materiality GAR principle, we can't show this as sundry expenses. We have to highlight this. There's a 20,000 that was stolen. So we will debit account like loss due to theft. So now this is highlighted. Whenever we do the statement of comprehensive income, then that 20,000 will be shown as an expense, loss due to theft. So if anybody looking at the financial statements will realize that this was important, because it is a separate account. It's not shown as sundry expenses. If we come to the internal control, they ask us the two problems. Now, obviously, the 20,000 is a problem. That was stolen. So theft of 20,000, so you identify the problem, but you also give an amount, because they asked for figures. 20,000 Rand was stolen on the way to the bank. So there's poor internal control measures. Deposits being done by only one person, that's the problem. No protection for the person going to the bank. So any of those with the number of 20,000. Solutions, rotation of duties and times of banking, so that there won't be a pattern that somebody can see every day, certain time, a certain person is leaving the business, going to the bank to do deposits. You can provide security to the person going to the bank, that you at least have two people, not only one. You can also use cash transit business to transport the cash to the bank. this is expensive, but it is a solution, a possible solution. Then Karen only admitted that she was robbed on her way to the bank after investigation. So it can be that Karen took the money. She could be guilty of theft, so the business or the owner must investigate that. And then also you can encourage the tenants or your clients to make EFT payments so that you don't sit with that much cash on hand. So that will also be a solution to the problem. That is one problem. The second problem was that first one that said the 53,000 that was outstanding. It was deposited, or it showed in the CRJ on the 20th of April. Now we are at the end of April, the 30th of April, and that money is still not deposited. It still does not appear on the bank statement. So where is that money? So it's a large outstanding deposit, maybe a possible rolling of cash. Karen is using that money for her own use, the 53,000. Maybe a friend needs money. She lent it to the friend, charge interest, and then after 2 weeks, she put the money in the business's bank account. So she did not steal it. She did not take it for herself, but she's using the business's money. So we talk about rolling of cash. It can also be that the bank made an error, that they deposited that amount incorrectly into another bank customer's account instead of into our bank account. The solution for that, we must ensure that the deposits are done on a regular basis, every day, once a week, every 2 days, depending on how much cash we have in the business. You can also arrange with the bank to send a notification, a SMS or an email to the owner to confirm that deposits are made, and obviously then the owner can check that with the deposits for the day. And then obviously we encourage our customers to make direct deposits, EFT entries. Okay, that was bank reconciliation. Now we go over to creditors reconciliation. Creditors reconciliation, where we receive a statement from outside, from the creditor, and we compare it to our books in order to make sure that the two amounts are the same. Sorry, we've done that already. We are at the creditors reconciliation. Two different things. Now, this will not be something that you maybe are taught in class, but there are two different ways of doing the creditors reconciliation. The one is an internal one, where everything is our mistake. That is what we've done in grade 10 with you. You must be able to do it now in grade 11, but you must also be able to do it next year in grade 12. That is where we've done the creditors control account, and we compare that with a list of creditors balances, and the two are not the same. So that is the internal one. The external one is the one where you receive the statement from a party outside of the business. That's why we say external. So internally, the creditors control account will be compared to the list of creditors balances. Our mistakes, all of those are our mistakes. So we will correct it in our books. Externally, the creditors ledger account of the creditor will be compared with the statement that we received from the creditor. You must be able to do both reconciliations. Creditors reconciliation, if we look at the external type of reconciliation, the methods, once again, the tick-off method, where they give you the creditor's ledger account and they also give you the statement. And then you have to compare, you have to tick off and encircle those things that do not tick off. Or the other method is where they only give you the differences and you have to do the reconciliation. The type of questions asked, you have to complete the creditor's ledger account and the creditor's reconciliation statement. So you show the full creditor's ledger account. Or the second option, you only have to calculate the correct balance of the creditor's ledger account and then show the creditor's reconciliation statement. And the third possibility is then in table format. Like I said, this must be able to be done in grade 11 and it goes through to grade 12. Principles when we get to creditor's reconciliation. The entries on the statement that we received from the creditors, entries that appear on the statement but not in the creditor's ledger, will be entered in the creditor's ledger in our books. Entries in the creditor's ledger, in other words, in our books, but not on the statement, we will show on the creditor's reconciliation statement. We will show it there. Our mistakes, we correct in our books, in the creditor's ledger. And their mistakes, we enter into the creditor's reconciliation statement. We can't fix their books, but we show it, we correct it in the creditor's reconciliation statement. Important principle again, in our books, a creditor will increase with a credit entry, will decrease with a debit entry. So if we refer to the creditor's control account, creditor's control account will be credited if it's an increase, will be debited if it's a decrease. If we look at the creditor's reconciliation statement, then it is just the opposite. A debit entry will increase the amount and a credit entry will decrease the amount. We must remember that when we buy on credit, that business or that person is a creditor for us, a liability. We owe the money to that business. But from their point of view, we are a debtor because we owe them that money. That's why a debit balance on the statement is what we owe them, must correspond with a credit balance that we have in our books. We are going to look at activity 5, where we are going to do the creditor's ledger account and also the creditor's reconciliation statement. That is in your activity book on page 6, and in your workbook it is on page 5. And once again, there are 2 activities that you can look at for self-study, that you can work through. Activity 5 says that the information relates to Solomon traders. The important thing, who are we and who are they? We are Solomon's traders. So whenever we see Solomon's, we know this is us. And wherever we see VDM suppliers, we know this is them. So we have to prepare the correct account of VDM suppliers in the creditor's ledger in our books, prepare the creditor's reconciliation statement, and then they also ask you to name 2 tasks of the creditor's clerk to maintain or improve the internal control. Remember, internal control is one of those topics. It's not tested separately, but it can be tested in all topics that we do during the course of the year. Balances given on the 28th of February. In our books, we owe them 23,000. This is in our books. They say we owe them 25,000. And yet again, from the statement, it's a debit balance. In our books, it's a credit balance. So now we must reconcile. We must get these 2 the same. In this case, it's not the tick-off method, but they've already compared and they just give you the differences. And they ask us to show the creditor's ledger account as well as the creditor's reconciliation statement. Now, if you can still remember from grade 9 and grade 10, where we've done a creditors ledger, we start with account rendered. That was the balance at the beginning, according to the statement, or according to our books, 23,410 rand. The balance as per statement that we received from them, that was their balance of 25,364. Now we start with the differences. The first one says that an EFT payment of 3,200 appeared in the creditors ledger, in other words, in our books, but not on the statement of account. But we have to read further, because it says on investigation it appears that this was actually a payment by Solomon's Traders to KZN suppliers. So we paid 3,200, but we did not pay VDM suppliers, we paid KZN suppliers. So we debited the wrong creditor, so we have to add that again to the creditors account. Remember, credit is plus in this case, and debit is minus. And this was a correction of an error. So we subtracted from VDM instead of from KZN. So now we add to VDM, and we're going to subtract from KZN. 23,410 plus the 3,200 will give you a new balance of 26,610. Then the bookkeeper did not record the invoice that we received from VDM suppliers. So we made the mistake, we forgot about the invoice. It was never recorded. Invoice number 621. Invoice means we bought on credit. So we will increase the amount that we owe that creditor. And that will give you 30,976 if we add that to the 26,000. 2.3, Solomon's Traders incorrectly credited a debit note to the creditors ledger account of VDM suppliers, 340. So yet again a mistake made, so this will be a correction. It was our mistake, because it says Solomon's Traders, we incorrectly credited a debit note. So instead of subtracting, we added the credit note. Credit note means we sent goods back to the creditor. So his account was supposed to decrease, but we increased it. So we must decrease it with twice the amount. If we debit it with only the 340, then we only cancel the wrong one. But we must cancel the wrong one plus make an entry for the new one. 3976 minus 680 will give us the new balance of 3296. 2.4. EFT 2041 for 6,260 issued to VDM suppliers was incorrectly recorded in the CPJ. Again, we made the mistake. We issued an EFT, but in the CPJ, we recorded the incorrect amount. The payment that we made was 6,260. We entered it as 2,620. So there's a difference of 3,640. So that's the amount that we are looking at. It's an EFT payment. We paid them. They were supposed to decrease with 6,000. We only decreased them with 2,000, so we must decrease them with an additional 3,640. We subtract, and then we get the balance of 26,656. 2.5. The statement of account, in other words, their books, reflects interest of 114 Rand charged by VDM suppliers on the overdue account. The interest has to be recorded and posted to the creditors ledger. something appearing on the statement, not in our books, they charged us with interest. So that must still be added, and that will be the interest that was added, therefore in the credit column, and we add and we get 26,770. So we started with owing them, according to our books, 23,000, and we end with owing them 26,770, and this will be the correct amount that we actually owe them. If we continue, 2.6, an invoice for 5,885 was entered correctly in the creditors ledger. Creditors ledger is our books. That was entered correctly. But the statement of account received from VDM suppliers on their records showed the invoice entered as 8,558. And the creditors clerk did contact VDM and they promised to correct the error. So we only bought for 5,885, but they increased our account with 8,558. So this is a correction to be made. The difference between the two, the 8,558, and this is an easy typing mistake to make, 5,885. So the difference is 2,673. We paid 8,558. They only decreased our account with 5,885, so they must decrease our account with another 2,673 in brackets. That means subtract. And then the transactions, number 2.7, after the statement date of the 26th of February, that means the statement date was the 26th of February. But after that, there were still two transactions that took place. The one was where we bought on credit, invoice number 2130, not shown on the statement. Obviously, that must be added because we bought on credit, and then the goods returned. The goods that we returned also not on the statement. So that must be subtracted 1048. And if you do that calculation, yet again, the magic. This is now reconciled. We've corrected our mistakes in our creditors ledger. We've corrected the mistakes and the differences in the creditors reconciliation, and those two balances are the same. So the correct amount, the actual amount that we owe them, is 26,770. If you look at tasks of the creditors clerk, now remember, the creditors clerk will be the person that is responsible for ordering goods. That can be the person receiving the goods, but that can also be the person that is responsible for making sure that the creditors are paid on time. So those are all tasks for the creditors clerk. So how can his tasks improve the internal control to make sure that there is proper control over our creditors? The first one, goods received, should be compared with the orders placed to ensure that the goods received are according to order. We've ordered certain things, so when we receive, we check against the order. But we must also compare the goods delivered to ensure that all items were received in good condition. When we receive stock that we ordered, we will get a delivery note. We will also get the invoice. We have to sign for it. But obviously, you must make sure that what's in the box is what is on the invoice. So you have to open the box and you have to tick off. You have to make sure that what's in the box is on the invoice, because that invoice is going to be recorded in your books. The items on the invoice will also be recorded for your trading stock. So when your trading stock records are incorrect because you thought you received but you did not receive, then the internal control is not up to standard. So you have to check the invoice with the physical goods that you received. when you received it, not a month later, but on the date of receipt. The next one, returns of purchases should be properly authorized, negotiated. Payments should be supported by the correct or the reconciled monthly statement. We've made the corrections, and then when we pay our creditors, we make sure that the mistakes or the corrections that we made will be on the statement that they send us. We correct it and send it back to them. And then we must also make, or the creditors clerk must make sure that the creditors are paid on time. Why? We don't want to pay interest. We can, if we pay well in advance, we can receive discount, and that is what we want to go for. We want to go for the discount received and not the interest that we have to pay on an overdue account. Okay, that will be creditors reconciliation. The next topic that we are looking at will be asset disposal. Asset disposal, where we sell vehicles or equipment. Asset disposal. Three things that we have to ask ourselves: when are we selling, how are we selling, and at what price are we selling? When we are selling, we can sell at the beginning of the year, we can sell at the end of the year, or we can sell during the year. Now, that means the dates are important. They are not going to tell you this was sold at the beginning of the year. They will just give you a date. So you must make sure that you look at the dates, because each one of these are handled differently. How do we sell? We sell cash, or we can sell on credit, or it can be a trading, where we buy a new one, but we trade in an old vehicle. The owner can also take vehicles or equipment for own use, and that will obviously be at carrying value. And also, if we donate vehicles or equipment, that will also be at carrying value. And we know this will be entered in the asset disposal account on the credit side next to the selling price. At which price did we sell it? Did we sell it at carrying value? In other words, not making any profit or loss? Did we sell it at a profit where the selling price is more than the carrying value? Or did we sell it at a loss where the selling price is less than the carrying value? Steps that you have to take. Now, asset disposal is one of those topics that will be done in grade 11. It will continue in grade 12. Also can be tested in paper 1 and paper 2. And this will also be one of those topics that will be in every paper, every exam that you write, either paper 1 or paper 2. Maybe in grade 12 it will not be a separate question where they test asset disposal, but it can be one of the adjustments that you do. So asset disposal, a very, very important topic. If you remember the steps, then we can never ask you something that you will not be able to do. You have to remember the 5 steps, and if you apply those 5 steps, then asset disposal is actually very easy. The first step, the first thing that we are looking for is the cost price. Somewhere in the information, they must give us the cost price, and we take that out to the asset disposal account. The second step is where we write off pro rata depreciation. That means from the beginning of the year up to the date of sale. Remember, we are only writing off depreciation at the end of the year. So when we sell an asset during the year, we have to write off that pro rata depreciation. The third step, we transfer the total accumulated depreciation to the asset disposal. Then the fourth step, we enter the selling price in the asset disposal account. And then the last step, we calculate the profit or loss on sale of asset in our asset disposal account. Principles, dates, very, very important. The dates are given. When you do the ledger accounts, enter the dates given, enter them correctly, enter the years correctly. Carrying value, when we refer to carrying value, we know that equals the cost price minus accumulated depreciation. And then also remember the fully depreciated assets must show a carrying value of R1. Again, this will not be something that they highlight in a question paper. They will just give you the depreciation to be written off. And the moment that you see at the end of the year the carrying value of a vehicle or equipment is negative, then you know that can't be. So you have to write off less depreciation so that you still show it at a carrying value of R1. While we are still using these assets, they must still appear in our books at carrying value of at least R1. If we look at the formats important. Now, a format to me is like a picture. If we ask you to show the vehicles account, you must see the picture. You must know what must be entered on the debit side and what must be entered on the credit side. The same with asset disposal. It is non-negotiable. You must know the format. That is something that you have to study in accounting. Sometimes you think, accounting, you just have to understand. You don't have to study anything. That's a lie. There's a lot of things that you can study that you must know in accounting. So the format's very important. If we look at the vehicles account, we will start with a debit balance. Always a debit balance. Remember, vehicles are shown at cost price. Then we can buy new vehicles. We can buy cash, CPJ. We can also buy vehicles on credit, creditors control, CJ. Very often when we trade in an old one for a new one, that new one is bought on credit. This is grade 8, this is grade 9 work. Now we sell. So we take out the cost price and we take it to the asset disposal account. That will be the cost price of the item sold, and then we calculate the balance carried down. And our vehicles account or equipment account will always end with a debit balance, can never have a credit balance. Accumulated depreciation on vehicles will always start with a credit balance because this account decreases the carrying value of our assets. Then we write off depreciation on the date of sale. This will be when we sell during the year. We have to write off depreciation from the beginning of the year up to date of sale. Then we need to take out the total accumulated depreciation written off on that asset. We take that out to the asset disposal. Then at the end of the year, nothing to do with asset disposal, a normal depreciation that must be written off at the end of the year. These will be general journal entries, and this is for the year that we write off at the end of the year. And that will be the new ones that we bought and which we had for the whole year. The new ones that we bought will be these two, CPJ and the CJ. What we had for the whole year was what we had at the beginning minus what we sold. At the end of the financial year, then we will balance this account, and it will always have a credit balance, end with a credit balance on that side. Asset disposal, non-negotiable, you must know the format. We start with the cost price of the vehicle that was sold. then the accumulated depreciation on this vehicle, the total depreciation that was written off. Total accumulated depreciation. Then we sold it for cash, then we will debit bank. We sold it on credit, then we will debit debtors control. We sold it on credit, then we will debit creditors control because it's a liability that decreases. If the owner took this for own use, it will be drawings or it can be donations if we donated vehicles. And obviously these two will be at carrying value. There will be no profit or loss. And then we calculate profit on sale of asset. Will always be on the debit side, or a loss on sale of asset. Remember, we can never have a profit and a loss on sale for the same item. Either a profit or a loss. And then this account will close off. Never a balance on this account. If you struggle to remember, you can see the balancing amount is on the debit side, but you can't remember whether it's a profit or a loss. We always refer to profit or loss. We don't talk about loss and profit. It's profit and loss. The same with fish and chips. We talk about fish and chips, not chips and fish. So it's profit and loss. So profit on the left-hand side first, and then loss on the credit side. Also, we're going to credit this account, and it is an income account, so it must be credited. Loss will be debited, which is expense, which will decrease the owner's equity. When we look at the steps, there is our first step. We transferred the cost price of the sold asset to the asset disposal. The second step only applies when we sell during the year. The pro rata depreciation for the number of months that we had that asset. The third step, we have to take out the total accumulated depreciation that we wrote off. In other words, the pro rata plus what was included in the opening balance of that asset that we sold. The fourth step, we record the selling price, and the last step, we calculate the profit or loss on the sale of asset. If you know the format, if you can do these ledger accounts, then you will be fine with asset disposal. Also, asset disposal can be tested by asking you to calculate, or by asking note number 3 in your statement of financial position. And very often you refer back to these ledger accounts. That's why in grade 11 we put emphasis on the ledger accounts. Ledger accounts, according to me, is the 911 of accounting. Whenever you're not sure about anything, you draw a T account to make sure to see which account must be debited, which account must be credited. So make sure you know the format and understand what you are doing when you do the ledger accounts. How will this be tested? They can ask you to do a general journal or the general ledger. This is sort of the more popular one to test, because if you do the general journal, you can obviously do the general ledger. If you can do this one, you can do the general journal. Calculations only, and then note number 3 on the statement of financial position. That can also be tested, grade 11 as well as in grade 12. And then internal control measures over assets can also be tested. Once again, internal control, ethics, part of all topics that you do. We are going to look at activity 2, which is note number 3 on the statement of financial position, and that will be in your activity book. That will be on page 9 and 10, and in your workbook, page 8. Once again, 3 activities that you can do on your own. Activity 1, 3, and 4. The one specifically where there is a fully depreciated asset, and also ledger accounts. So make sure you look at those activities. Information relates to PPE traders. The financial year end on the 28th of February 2020. Now the first question they ask us, a reason why land and buildings is usually not depreciated. We always refer to depreciation written off on vehicles and equipment, not on land and buildings. And then depreciation, why is it described as a non-cash item? Then we have to do the asset disposal account by referring to information B. Information B will give us all the information we need for the asset disposal. And then they give us note number 3, the asset disposal note, and we have to calculate the missing amounts. Asset disposal, there was an old vehicle was traded in. If you see the word traded in, you know in the asset disposal account on the credit side, creditors control. A new vehicle, so obviously vehicles account on the debit side, there will be a new vehicle that was bought on credit. When was that? On the 28th of February. That was at the end of the financial year. They don't tell you it was on the last day, but if you look at the dates, you see that the 28th of February is the last day of the financial year. The old vehicle cost 30,000. There's one piece of the puzzle, the cost price. And the depreciation written off, 2382 at the date of sale. And this includes the depreciation of the current year. So that's your total depreciation written off, another piece of the puzzle. And then a small profit. They made a profit of 200 Rand. So in this case, they do not give you the selling price, but they gave you the profit. So then you can just calculate the selling price. First question, reason why land and buildings usually not depreciated, because land and buildings usually appreciate in value over time. Their value increases. Generally, it will increase. Therefore, we don't write off depreciation. Their value will not decrease. And then also depreciation, which is a non-cash item. Depreciation is not something that we pay. We make a book entry for that. We just debit depreciation and credit accumulated depreciation. It's not as if we must make an EFT payment in order to pay our depreciation. So it's only a book entry. We refer to that as an imputed expense. It will appear in my profit and loss account, but it is not a paid expense. Other examples will be your bad debts, also something that will appear as an expense but not paid. Discount allowed, the same. Trading stock deficit, those are all imputed expenses, non-cash items. It's an expense, but it's not a paid expense. 2.3, the asset disposal account. Now, yet again, the format, you know, on the debit side, the date of sale, 2020, that was February the 28th, February 2020 had 29 days. Vehicles, the cost price was given as 30,000. That's an easy piece of the puzzle. Normally they will give that to you in a sentence, easy to identify. Then at the end of the financial year, the total accumulated depreciation. You have to write out the full name of the account. We know that space is limited, but try to write small so that you can fit it in there. In this case, it was given. They said 20,382. Then the selling price, it was a trade-in. So we know it must be creditors control. They did not give us the selling price, but they did tell us that this was sold at a profit on sale of asset. And a small profit of 200 Rand was made. We know this account must close off. So 30,200, this side must also add up to 30,200, And if we calculate the difference, 9,818. So that was the trade-in price, 9,812. If we look at the marks that will be given, marks, non-negotiable, your vehicles account, vehicles where you transferred the cost price. Accumulated depreciation will normally be a method mark if you showed the accumulated depreciation account. Now this will normally be the pro rata depreciation plus what we wrote off previously. The selling price and then the profit was given. So for your asset disposal account, you are supposed to get easy marks if you know the format. Next one, if we look at note number 3. Note number 3, the first one is land and buildings. At the beginning of the year, land and buildings was 160,000. At the end of the year, 250,000. So obviously, additions at cost price must be the difference between those two. The 250 at the end minus the 160 at the beginning. That will give you additions at cost price, 90,000. Information B, the disposals at carrying value. Now we've done the asset disposal account, and we will find the carrying value of what we sold, we will find in the asset disposal account. The difference between the cost price and the total accumulated depreciation. That will give us the carrying value of what was sold. And the carrying value of what was sold, 9,618. And immediately that makes sense. That was the carrying value. They said we made a profit of 200 Rand, therefore we had to sell it for 9,818. Information C, cost price at the end. We started with vehicles of 80,000 at the beginning. Additions at cost price, that new one that we bought. And now we must remember to subtract the cost price of the one that we sold. And that will give us 110,000. Accumulated depreciation at the beginning was 22,200. We wrote off depreciation during this year, and then we subtract the total accumulated depreciation that we wrote off on the vehicle that was sold, so that will give you 10,488. And then E is easy. That will just be method marks, because that will be your 110,000, your cost price at the end, minus your accumulated depreciation at the end, will give you the carrying value at the end, 99,512. Number F, the carrying value at the beginning, you can't calculate that before you calculated information G. Information G can be calculated because you know that the total accumulated depreciation at the end of the year is 37,300. During the year, we wrote off depreciation of 4,800, so the depreciation at the beginning must have been 32,500. And now it's easy to calculate F, because it's the cost price given, 52,000, minus the one that we just calculated, 32,500, and that will give you the carrying value at the beginning, 19,500. Information H, the cost price at the end. We did not sell anything. It was the cost price at the beginning plus the additions at cost price, the one that we bought. So we end with vehicles with a cost price or equipment with a cost price of 57,000, and then I will just be H, the cost price, minus the accumulated depreciation that was given, and that will give us 19,700. If we look at note number 3. Note number 3, when you calculate, you can also, the carrying value at the beginning plus the 60,000 minus the disposals at carrying value minus depreciation will give you the carrying value at the end. This is a very important principle that you can use whenever you have to do calculations. For instance, that I that we had to calculate, the way we calculated it was H minus 37,300, but you can also say F plus 5,000 minus 4,800 must give you that one. This is very handy, specifically when you sold the disposals at carrying value. So remember that this one, not only for this year, but also for next year. A very handy calculation to be done. Okay, that was asset disposal. Important topic. Make sure you understand that. Now we get to partnerships. Partnerships where we have more than one owner. We've done sole traders in grade 8, 9, and 10 where we only had one owner. But now we will have more than one owner, 2 to whatever number, but on school level we will only limit that to 2 partners. If you can do it for 2, you can do it for 3 or 4 or 5 partners. But school level, only 2 partners. Obviously next year you will do companies where we have shareholders. So we are moving from sole trader to partnership to companies next year. Okay, so let's look at partnerships. Partnership, what are we going to look at? We are going to look at the GAAP principles that you've done in grade 10. You will do it again this year, and it will be part of what you must be able to do again next year. General ledger accounts, then we're going to look at final accounts. And then next term, we will do the financial statements, the statement of comprehensive income and the statement of financial position, as well as analysis and interpretation. I think by this time you've realized that we don't really talk about income statement and balance sheet anymore, but we refer to that as the statement of comprehensive income and statement of financial position. So make sure you get used to these new terminology that we use. The principles are the same, income statement and balance sheet, and the new names. The same thing, but just be familiar with that. The GAAP principles, there are 6 of them. You've seen that in grade 10. Normally, you are okay with the historical cost. You remember that one. These 2, prudence and materiality, the more difficult ones. Prudence, conservative approach. Materiality, is it important to highlight? Going concern, will the business go on in the foreseeable future? Entity, remember the business and the owners, 2 separate entities. And then the matching concept. This is what we do when we do adjustments, because we adjust the amounts so that we either add or we subtract. What we paid in advance, we subtract to match the expense or the income with this current financial year. So please make sure this is something that you have to study. It is normally, explained very well in your textbooks. Go back to that, test it, match column A to column B, or they will ask you which GAAP principle applies in the following transaction. So make sure you know them and you know what they mean. What is different in partnerships? If we compare sole trader that you did last year with partnerships this year. Sole trader, we had 1 capital account, we had 1 drawings account. But now for partnerships, we will have a capital account, drawings account, and a current account for every partner. The net profit in the sole trader was transferred from the profit and loss account to the capital account, because the capital account was the account of the owner, and the owner was the sole trader, therefore he received the full net profit. But now in partnerships, the net profit will be transferred from the profit and loss to the appropriation account. So there's a new account, appropriation account. Then the drawings, we usually closed off to the capital, but now we close off the drawings accounts to the current accounts of the partners. Capital account balance varies every year in the sole trader, but in the partnership, it will only change when a partner increases or decreases their capital contribution. The final accounts that we had in sole trader, trading account, profit and loss account, and now with the partnerships, we add to that appropriation account. Just to show you this one on the capital, if we show you the capital account that we did last year, you will remember that we started with the balance of the capital. Then if the owner contributed more capital, it will be added because this will increase owner's equity. Then the net profit will go to the capital account, profit and loss, and we closed off drawings to the capital account to get a new balance at the end. That will be taken to the credit side again. That is why we said it varies every year, because we add the net profit to the balance. But in the partnerships, it will only vary if the partner increases his capital contribution, or when the partner withdraws, decreases his capital contribution. There can be another entry there where the owner decreased his capital contribution, then we will credit bank and debit capital. So that's just to explain that one. Final accounts that we have now 3 final accounts. The trading account, where we calculate the gross profit, profit and loss account, where we calculate the net profit, and then the appropriation account, where we show the final distribution of the net profit. Trading account, if you can remember from last year, trading account, we have sales, we close off sales, obviously, we subtract debtors allowance from that, then we close off the cost of sales, and the balancing amount will be the gross profit that goes to the profit and loss account. That's your trading account. The profit and loss account, we start with the gross profit that was transferred from the trading account. Then we close off all income accounts. We close off all expense accounts to the debit side. And then this year, for the partnerships, we will transfer the net profit to the appropriation account, the net profit. Again, this account must close off. And then the appropriation account will start on the credit side with profit and loss, which will be the net profit. And then obviously, how are we going to divide that profit? Salary of each partner, interest on capital, there can be a bonus, and then the current accounts of the 2 partners, and must close off. Sole trader, partnership, trading account stays the same. Profit and loss exactly the same except for this part, where we don't transfer the net profit to the capital account but to the appropriation account. And obviously the appropriation account is new in partnerships, because we have to show how did we distribute the net profit between the partners. When we look at final accounts, obviously adjustments that we've done in grade 10 that we are going to continue in grade 11, accrued income, prepaid expenses, and we know those are current assets. We also have accrued expenses and income received in advance, which are current liabilities. Make sure you know which two are current assets and which two are current liabilities. Now these will continue, grade 11 and grade 12, the adjustments. More adjustments that we've done, you must be able to write off bad debts, and then provision for bad debts adjustment. This is a new one in grade 11. So grade 11, we teach you how to adjust the provision for bad debts, because we know that a certain percentage of our debtors will not pay, so we provide for that. Then depreciation and after asset disposal depreciation is actually very easy. Trading stock deficit, difference between what was counted and what is in our books. Consumable goods on hand, wages and salaries that was omitted, a worker's salary or employee salary that we did not record. How do we handle that at the end of the financial year? And obviously, correction of errors. Now, these adjustments that you do, we've done that in grade 10, grade 11, and it continues in grade 12. So make sure that adjustments, that's also always a very nice part of the work that we do, is the adjustments. So make sure you know how to do it. And this is also where the T accounts come in. When you have to decide whether to debit or credit, whether to increase or decrease, to plus or minus, you refer back to your T accounts. Then there's something else, reversal of adjustments. Now the adjustments are done at the end of the financial year. At the end of the financial year, while the reversing of the entry will be done in the beginning of the next financial year. We debit accrued income, we debit prepaid expenses. Why? Because they are current assets. We credit accrued expense and we credit income received in advance. Why? Because they are current liabilities. That is at the end of the year. That is to take out and to add. But now, the beginning of the next year, we must reverse that. Then it will just be the opposite. Now we are going to credit the accrued income. We're going to credit prepaid expense. We're going to debit accrued expense and debit income received in advance. Obviously, you don't study these. You must make sure you know these. If you know the adjustment, this is what we normally work with. If they refer to a reversal that was not done, then you know it's just the opposite. Just to explain with T accounts, if you have rent expense, this is an expense account, so it will have a balance on the pre-adjustment trial balance, say 11,000. The rent is 1,000 rand a month. So there's 1,000 rand that we did not receive. So at the end of the year, we will make the adjustment where we add that 1,000 rand and we will debit rent expense and we will credit accrued expense. We will close it off to the profit and loss account, 12,000. Matching concept, we matched this year's expense with this year. No, we haven't paid everything yet. We've only paid 11,000, but the real expense is 12,000. And accrued expense must be credited with what? With rent expense. This is at the end of the year. And this will be shown in the statement of financial position. This will be a liability. Now at the beginning of the next year, we reverse this. So we want to get rid of this accrued expense. So we debit that with what? With rent expense. To get rid of that 1,000 rand. And then we credit rent expense with accrued expense. 1,000 rand. And this makes sense. Rent expense, at the beginning of the year, there is 1,000 rand at the credit side. That is what we owed for last year. So the first payment that we make for rent will refer to the previous year's rent that we still had to pay. The same for prepaid. Prepaid rent expense, again at the end of the year, the balance brought down. We've already paid 13,000. So we've paid 1,000 in advance. In advance means we must subtract, we must take away, right on the other side of the balance of the account. Prepaid expense, 1,000. So we will close off to the profit and loss 12,000, which is now our correct expense for rent, 12,000. Prepaid expense will be debited at the end of the year with rent expense. This will be a current asset, 1,000 rand. That will be shown on the statement of financial position under current assets. Beginning of the next year, we want to get rid of the 1,000, so we must credit prepaid expense with rent expense, 1,000, and then we're going to debit rent expense with prepaid expense, 1,000. And once again, it makes sense. The beginning of the next financial year, there's already 1,000 rand on the debit side of rent expense, meaning that we've already paid that. There's already 1,000. We did not pay it now, so it's not as if we paid it bank there, but it was from the previous year. So that is just to explain the reversal of adjustments. Activities that we're going to do. Activity 3, where we look at ledger accounts, and then activity 4, where we look at final accounts. In your workbook, page 12, page 13 and 14, and then again, there are 2 more activities that you can do for self-study. Partnerships, activity 3. That first part you can do on your own. That is just where you have to write in the amount and show what is the effect on the assets, the owner's equity, and the liabilities. So please work through that one on your own. So this will be a self-study one. Obviously, you can check the solution to make sure that you are correct. Information in 3.2 relates to J&B stores with partners Becca and Janet. Their financial year ends on the 31st of March 2021. And we have to show the appropriation account, and we also have to show the current account of Becca. They give us information at the end of the year, on the 31st of March 2021. Important to notice, this is at the end. So at the end of the year, the capital contributions 800,000 and 500,000. Then the current accounts, make sure you always read whatever is given in brackets. On the 1st of April, Becca had a debit balance, meaning she withdrew more of what was granted to her the previous year, and Janet left 36,000 rand of what was granted to her of the previous year. She left in the business. Drawings, question marks, profit and loss, there is your net profit given. They give you the interest on capital for Janet and the sales 2.4. If you look at this, then you may ask, why do they give us the sales? But let's read the information. Becca earns a salary of 15,000 per month. Important, per month. We want to see per annum, per year. So we have to multiply that by 12. Janet is already per annum. Becca withdrew 75% of her salary and Janet the full amount. Important, the next sentence. That was the only drawings for the year. So here they actually give us the drawings. Interest on capital paid at a fixed percentage. Oops, they don't give us the percentage. But they did tell us that Janet, the interest she received was 25,000. and they told us that Janet's capital contribution remained unchanged during the year. So then that's actually not so difficult. Janet received interest of 25,000 on a capital contribution of 500,000. And if you calculate that, then you see the interest is 5%. So that fixed percentage is 5%. And now we can calculate Becca's interest on capital. She contributed another 200,000 capital on the 1st of January, and it was recorded correctly. So at the end of the year, her capital was 800,000. But that was after she contributed another 200,000. So at the beginning it had to be 600,000. So she can earn interest on the 600,000 for the whole year and on the 200,000 only for the number of months that she had that capital contribution. And then they say Janet earns an annual bonus of 1% of sales. Okay, now we know why they gave us the amount for sales. And then the final distribution will be in the ratio of the capital balances when at the end. So that will be in the ratio 8:5. Becca's capital contribution was 800,000 and Janet's capital contribution at the end was 500,000. Okay, that one you do on your own. If we look at the appropriation account, yet again, format important. What I mean by format is when they ask you to show, in this case, appropriation account, you immediately know what goes on the credit side, what goes on the debit side. It is as if you see the photo, and then you start writing. Without putting in any amounts, you know what the format must be. Again, that's something that you have to study. It's something that you have to practice. It's not as if you're going to remember that magically when you write a test or exam. You must study that. So we know on the credit side, profit and loss. That was given. They gave us the net profit, 800,492. On the debit side, the annual salary. Now, Janet's annual salary was given, 144,000. Becca's salary was given as a monthly salary of 15,000. Times 12 will give you her annual salary of 180,000. The bonus that Janet received was 1% of the 2.4 million times the 1%, 24,000. Interest on capital, they gave us the interest for Janet, so we must just calculate the interest on Becca's capital. Now, Becca at the beginning, we said that she contributed another 200,000. So on the 200,000, we've calculated the 5%. She contributed that on the 1st of January. So she can only receive interest for January, February, and March for 3 months. And that will give a 2,500. She had a 600,000 for the whole year, and she can earn interest at 5% on that amount, which will give you 30,000. So her capital or interest on capital will be 32,500. And there you have the interest on capital, 57,500. Now, if you add these four, that refers to your primary distribution. And if you add that, you get to 405,500. This is also something that we're going to show in the note for on the statement of financial position. When we do that, we're going to refer to that as the primary distribution. For the final distribution, we know that Becca must get 8 out of the 13 parts and Janet 5. those two add up to 13, so we must divide whatever is remaining, we must divide by 13, and then multiply by 8 for Becca, multiply by 5 for Janet. And how do we know how much is left, or how do we divide that? The net profit minus the primary distribution will give us what is the remainder. The remainder, 394,992. So that divide by 13 times 8 will go to Becca, divide by 13 times 5 will go to Janet. So Becca is going to receive of the remainder of the profit 243,072, and Janet is going to receive 151,920. And this account must close off. At the end, it must close off. No balance on the appropriation account. If you look at the current account of Becca, current account, we must just make sure whether it starts with a debit balance or a credit balance. Now, Becca's account, and that they have to indicate to us, there is no way that you can know that. If we look at the information given, current account of Becca on the 1st of April was a debit balance. So the balance can either be debit or credit. Everything that is granted to Becca must go on the credit side, and this will all be general journal entries. The interest on capital, we've already calculated that. We've seen that her interest was 32,500. The salary, we've already calculated that in the appropriation account, and her part of the final distribution, 243,072. This all adds up to 455,572. The drawings, they did not give us the drawings, but they did tell us that she withdrew 75% of her salary, and that was her only drawings for the year. So that was the 135,000. Remember, we close off drawings to the current account. And then if you balance that, you get a balance of 314,972. This will also add up to 455,572. And obviously this balance will be brought down on April the 1st. $314,972. This will be April the 1st. So if we look at this, the current account of Becca, at the beginning, she had a debit balance. In other words, she withdrew 5,600 Rand more from the previous year's amount that was granted to her. That's why it had a debit balance. At the end of this year, she has a credit balance of 314,000. So she's taking much less of what is granted to her out of the partnerships. She leaves her money there, obviously for expansion of the company, of the business, the partnership. Because you are owner, you want to see the business as successful, because you're going to benefit from that, because you're going to get part of the net profit. So no use in taking everything and leaving nothing in the business. Yet again, format important. Okay, now we get to our last activity, activity 4, the final accounts, where we look at the trading account and also the profit and loss account, obviously with adjustments. And then they also ask us to show the calculation of the final distribution. You are allowed to do an appropriation account in order to calculate that. It's just a calculation, so the detail not important, but the amounts are. We have two partners, Suzuku and Terry. Very important to see when is the end of the financial year. We started on the 1st of March 2020 and it will end on the 28th of February 2021. So whenever they give us a date, you can identify that as at the beginning of the year, end of the year, or somewhere during the year, or the next year, or the previous year. So this is the 12 months that you are working in. Read through the information quickly that they give you, the capital, current accounts, drawings, vehicles, accumulated, there's a fixed deposit, trading stock, debtors. There is something strange on a pre-adjustment trial balance. Remember now, pre-adjustment trial balance is before we've made any adjustments and there's already accrued income. Then they tell us that is on the 1st of March. When is 1st of March? Beginning of the year. So there's 1,000 rand. When we get to that adjustment, we will see this was a reversal that was not done. Provision for bad debts, pension fund, SARS, bank overdraft, loan, PDP bank, 12% per annum. When we see bank overdraft, we know exactly where it must go when we do the statement of financial position. Nominal accounts, sales, cost of sales, debtors allowance, advertising, bank charges, bank debt commission, income, discount, pension fund contribution, insurance, interest on fixed deposit, packing material, rent income, and salaries and wages. That is just the normal expense accounts. Then they give us all the adjustments. We are continuing to the two final accounts. Trading account. Again, format non-negotiable. You must know the format. Trading account, we start with the sales, and you know you must subtract the debtors allowance. So you can do that before you look at any of the adjustments, you can show that. You know that on the debit side of the trading account, you must subtract the cost of sales. And the answer that you're going to get will be your gross profit to be transferred to your profit and loss account. Now, if you calculate that, there was no adjustments that influenced this any further. 885. The cost of sales, 497,700. If you subtract those two, then the gross profit, 214,185. This must close off. 711,885. No balance on a final account. That gross profit we transfer to the profit and loss, and we start our profit and loss with the gross profit. When you have an account like this, or question like this, make sure that you teach yourself a method that you can use to optimize your time that you have. Before you look at the adjustments, write all the information in your trading account and in your profit and loss account with the amounts given on the pre-adjustment trial balance. Then you don't have to look back on the question paper to see what that amount was. It's already copied from your question paper onto your answer sheet. Please just make sure you copy it correctly. Very often it's a long table, so use your ruler. Use your ruler to make sure that you write the correct account next to the correct account. And then you start with the adjustments. Then you're already halfway there. Then you already have a lot of information on your answer sheet that can be marked. But if it's still on the question paper, no marks. So teach yourself this method. It saves time and it helps you to get marks or to get something on your answer sheet. So let's look at the first adjustment. The first adjustment says that an annual insurance premium of 11,400 was paid on the 1st of January 2021. Now, January 2021, we are at the end of February, so obviously we paid that in advance. calculation for insurance, we paid 11,400. We paid for 12 months. January and February is within my current financial year, so the other 10 months is what I paid in advance. In advance, paid 9,500. When we say see prepaid, it means we must subtract. So next to our insurance, we paid 18,000, but of that amount, 9,500 is for the next financial year. That is why we subtract that. Obviously, that will be prepaid expense shown in the statement of financial position. Information B gives us interest on the mortgage loan that is capitalized. The annual loan statement from PDP Bank showed certain information. The balance of the loan at the beginning, then the interest will be capitalized, so they add the interest. Then they subtract the repayments, which include the interest, and then we get the balance at the end. And in order to calculate this, we normally work from the bottom upwards. So we start with 150,000. Then we add the 66. When we work from the bottom upwards, we change the signs. Minus 194,000. Obviously, you can also say 100, starting from the top, 194,000 minus 66,000 minus 150,000 to give you this amount, the amount of the interest that must be shown on the profit and loss account. This amount that they gave you will just be, when we show the statement of financial position, we know that will become the current liability. So on our profit and loss account, we don't have interest on loans, so that must be added. That is another expense, interest on the loan, and obviously we show the calculation here on the answer sheet. If we use the method from the bottom upwards, 155,000 plus 66,000 minus the 194,000, and that will give us interest on loan of 22,000. Adjustment number C. Debtor G. Fish, whose debt had previously been written off, paid 120. So we know we received money, we debit bank, we credit, bad debts recovered. But now it says the bookkeeper incorrectly credited the amount to bad debts. So instead of crediting bad debts recovered, they credited bad debts. So they subtracted from the bad debts. So that must be added again, the 120 rand. And it must be shown on the credit side as bad debts recovered, because this becomes an income now. We thought we did not receive, we're not going to receive the 120. We debited bad debts, and now this person is paying us. Therefore, we create this income, bad debts recovered. Number D, Stanley, a debtor who still owes us 252, must be written off. So we must write off more bad debts. So we add that 2520 to the bad debts, and the total bad debts 11,540. And now we have to adjust the provision for bad debts to 5% of the outstanding debt. We first need to see how much the debtors owe us. On the pre-adjustment trial balance, we see that they owed us 46,480. But there was Stanley that did not pay his account, so we write him off as irrecoverable. And then we calculate 5% of outstanding debt to get the provision. This is how much it must be. This will be shown on the statement of financial position. But now to make the adjustment, currently the adjustment is 2,400. So obviously it must decrease. It must go from 2,500 less to 2,198. So there's a difference of 302 rand. So our adjustment decreases, therefore the provision for bad debts adjustment will be income, will be shown on the credit side of our profit and loss account. Provision for bad debts adjustment. Remember the word adjustment, important, because this makes it the nominal account. And this was the 302 rand. We must decrease the provision, therefore the adjustment becomes an income. Number E, commission for 2021 not received yet, 1,200. Commission not received for this year, 1,200. Accrued income, accrued we add. But now it says, note that the reversal entry for the 2020 commission was not made on the 1st of March. When was the 1st of March? It was the beginning of the financial year. The commission we had on the pre-adjustment trial balance, we saw that accrued income. That accrued income had a credit balance, debit balance of 1,000 rand. It had to be closed off or written back, reversal. Commission income on the pre-adjustment trial balance, it shows the commission income as 2,000. So now to get rid of this one, we must credit that. We must credit accrued income and we must debit commission income. And they said that commission for this year not yet received, so we debit accrued income and we credit commission income with that 1,200. That is actually the adjustment for this year. So that is not the reversal, but the adjustment 1,200. So when we get to commission income, the 2,000 plus the 1,200 minus the reversal that did not take place. Yet again, the 911, we go back to our T accounts. That one should have been reversed at the beginning of the year. It was not. That's why on the pre-adjustment trial balance, we still see that 1,000 rand. So we must get rid of that credit. We debit commission income. Therefore, that 1,000 rand must be subtracted at commission income, so that the real commission income for this year is only 2,200. Number F, easy one, packing material that we have on hand. We know what we have on hand. We subtract, because that is according to the matching principle. We did not use that 190, so we cannot include that as an expense. We must subtract. And then they gave us the trading stock deficit. We don't have to calculate that. Trading stock deficit was given as 4,800. Number G, rent received from the tenant included the rent for March 2021. When is March 2021? The next financial year. The rent was increased by 450 rand per month. So we know we've received 21,300 rand for rent. There is our rent income that we received. But we know that that was 1 month in advance. We can't just divide by 13 because there was an increase in rent. If we count the months, We started with March, April, May, June, July, August, September, October, November. For 9 months, we had rent unknown. Say it was X. Plus for 4 months, we received that rent plus an increase of 450. And that gave us the amount that they gave us on the pre-adjustment trial balance, the 21,300. So now we can calculate X. We can solve X. So we know 9X plus 4X, 13X, plus 4 times 450 will give you 1,800 equals 21,300. You take over the 1,800, subtract that, divide by 13, and you get X that equals 1,500. But that was before the increase. So if we want to subtract the rent that was received in advance, we have to add the 450. So the rent that we received in advance was 1,950. Another method that you can use, you can take the 21,300 that we did receive and say that of that amount, 1,800 was the increased amount, the 450,000 for 4 months that we received. So we subtract that one, and then we divide that by the 13 months, and then we also get 1,500. Before the increase, so after the increase, 1,950. That is possible if they give you the amount that it was increased with. If they give you a percentage, then we will say, for instance, it increased with 10%, 0.1x, and then we solve that equation again. So in advance, we received rent income in advance, therefore we subtract the 1,950, and then the rent income, the real income for the year is 19,350. Depreciation, 10% per annum on the cost price of vehicles. The vehicles was the only, we only bought it now, this year. Depreciation, so 10% of the 130,000 times 20%, 10% of the cost price. Vehicles, that will give you the 13,000. And then for the equipment, we bought new equipment, 16,000. 16,000 that was bought, let's show me at the bottom. Depreciation is really not a challenge anymore after we've done asset disposal. 16,000, 15%. We bought that on the 1st of November, so we will have depreciation for November, December, January and February. That will be for 4 months, and that will give us 800 Rand. What we had for the whole year, the new equipment was purchased and recorded correctly. Equipment that we had for the whole year, 210,000 minus the 16,000 because it was recorded. But it is according to the diminishing balance method. So we must subtract the 46,400 as well, and that was for the whole year 15%, and that will give you 22,140. So there's your depreciation, and you show the separate amounts on the profit and loss account. So the 13,000 for the vehicles, and then we have the 800 Rand for the new equipment, and we have the 22,140 for the equipment that we had for the whole year. So the depreciation in total, 35,940. Make sure to show your calculations because you get marks for those. Maybe you just counted incorrectly the number of months. That's the only mistake you made, but you only show one amount. Then you lose all your marks. If you show calculations, you can at least get some of the marks. Then number I, an employee did not receive her February salary as she was in self-isolation due to COVID, and then her details were left out of the February salary journal. When we get to salaries, it's important to know the difference between the gross salary and net salary. The gross salary will be before any deductions, and net salary is after all the deductions. For your profit and loss account, you are only looking for your gross salary and your contributions. That's the only two things or items that will affect the profit and loss account. So you look for those two. All the others, creditors for salaries, pension fund, SARS, a pay as you earn, all of those will go on the statement of financial position because all of those are liabilities still to be paid. So for the profit and loss, gross salary, and the pension fund or whatever contribution that the business made. In this case, they said that the gross salary was 9,000, so we add that 9,000. And then the pension deduction was 800 Rand, but the business, the traders contribute to the rights pension fund on a Rand-to-Rand basis. So they contributed another 800 Rand for the pension fund contribution. So the pension fund contribution, not the pension fund itself. The pension fund itself is a liability. And then the salaries and wages is 47,580. Our packing material, if we subtract that, 29,610. The rest of the information will be on the partnership agreement. It will not influence the profit and loss account. Now we don't have to go back to our question paper. We can just rewrite these amounts because there were no adjustment on those. Discount received will be the 13,880. Very nice in this case. They gave us the net profit. But if you have to do something like this and you don't get the net profit, please don't spend all your time trying to get the correct net profit. Move on. Otherwise, you're not going to be able to finish your question paper. The last part of this question, the distribution, the final distribution for each partner. Now, that is the reason why they gave us the net profit, so that you can work with a correct net profit. The net profit was 42090. The distribution given in information K, the salary for each partner, 3,000 Rand per month. So we have 3,000 Rand for two partners for 12 months each. So the salaries for both, 72,000 to be deducted. The interest, 10% per annum. Terry increased his capital by 50,000 on the 1st of September. It was recorded correctly. So Terry, the 50,000 that he contributed, and he receives 10%. He increased that on the 1st of September. So that was for September, October, November, December, January, February. That was for 6 months. And the rest, at the end, his capital was 200,000. So at the beginning, it should have been 150,000 times 10%. And that will give you his 17,500. This will give you a 15,000. And this will give you a 2,500. So Terry's interest on his capital, 17,500. Not 200, 17,500. Then the interest for Zuzuku, no extra capital contributions at 10%, 26,000. And then they said that Zuzuku is entitled to an annual bonus of 20% of the net profit, and the net profit was 42090 times 20% of that will give you the bonus of 8418. So that is the bonus. And if we do that calculation, then when we've done the salaries, we've realized that they're going to share in a loss, because the net profit was 42,000 and already the salaries to be deducted from that is more. So they will share in a loss 81,828. It says that the remaining profits or losses are shared equally. So they will both share in a loss of 40,914. That means this amount will be debited to their current accounts instead of credited. It will decrease their owner's equity, therefore it will be debited. Now that's it for the revision for term 1. I trust that this really helped you, and I really want to encourage you guys to please study on your own. Work out as many activities as possible. You have the resources, find time and practice your accounting. Best of luck for the rest of the term and also for the rest of the year.